Today, the CFTC sues Binance and its CEO Changpeng Zhao for allegedly violating trading rules. Banks are stepping up to serve crypto companies following the collapse of Signature and Silvergate. And BitDigital's incoming CEO discusses what's next for the industry after the fall of those crypto-friendly banks. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices falling to kick off the week. As of noon Eastern, Bitcoin dropped back below $27,000. Ether traded right around $1,700, while Solana fell to $19. Okay, let's kick off your top stories with breaking news. The CFTC just sued Binance and the company's founder, Changpeng Zhao, for allegedly violating trading rules. The commission filed a complaint against the world's largest crypto exchange by trading volume and CZ in Illinois federal court today, alleging that the firm took a, quote, calculated approach to soliciting U.S. customers, violating federal regulations. The CFTC claims CZ and Chief Compliance Officer Samuel Lim, quote, actively cultivated lucrative and commercially important VIP customers, including institutional customers located in the United States. Now, we reached out to Binance for comment on the lawsuit, but did not hear back right away. Next, banks are stepping up to serve crypto firms after the collapse of digital asset-friendly lenders Signature and Silvergate earlier this month. The Wall Street Journal reports that those crypto execs have received a positive reception from regional banks, including Customers Bank, that's based in Pennsylvania, and Fifth Third Bank, based in Cincinnati. We reached out to those two banks, and a Customers spokesperson told us the bank is not confirming the information at this time. We did not immediately hear back from Fifth Third. Other crypto companies are reportedly moving deposits to smaller upstart banks that promote themselves as digital pioneers, like Cross River Bank, while others are still considering taking their banking business overseas. The Wall Street Journal also noted that the biggest banks, including JP Morgan and the Bank of New York Mellon, still do business with crypto clients, but are selective with who they take on and what services they provide. JP Morgan declined to comment, and the Bank of New York Mellon did not get back to us right away. Last, moving overseas, Chinese banks are courting crypto firms in Hong Kong after the ban in mainland China. Bloomberg reports that Chinese banks have been directly reaching out to crypto businesses over the past few months, and it's just another sign that Hong Kong's push to become a major center for crypto has backing from Beijing. That's despite the fact that crypto trading has been banned in China for more than a year. Bloomberg reports that the Hong Kong arms of Bank of Communications and the Bank of China are some of the banks that have either started offering services to local crypto firms or have made inquiries on the matter. One person reportedly said that sales representatives from one Chinese bank visited the office of a crypto firm to pitch its services. All right, for our main story, let's talk more about the fallout from the closure of those crypto-friendly banks. Crypto World's Tanea McKeel spoke with Sam Tabar, BitDigital's Chief Strategy Officer, about what's next for crypto after Silvergate and Signature, and what's in store for the company as he prepares to take over as CEO this week.
First and foremost, you're about to take over as CEO of BitDigital. What's it like taking the helm of a crypto mining company right now, especially with all the uncertainty last year for miners, with prices still way off their highs? What sorts of outlook, what outlook do you have for BitDigital and the mining industry at large?
Yeah, thank you for asking that question, and thank you for having me on. I have an overall goal, and I have certain strategic initiatives that I'd like to, I have a vision for the company, but my overall goal at the end of the day is to help restore some public confidence in the crypto sector. Our sector needs less villains, needs less self-serving behavior. My overall intention, my North Star as CEO of a public company, is to lead by example with prudent behavior and to act in a way that's in the best interest of all shareholders. Our sector, like I said, needs a lot more less villains. I'm tired of waking up seeing another headline in our sector, and it's just time to turn the tide.
We saw earlier this year the SEC come after Kraken for its staking services. Now this week with Coinbase. What does that mean for a mining business? What does that mean, I guess, for the sentiment in the crypto market, particularly with a name like Coinbase, which is a big sort of at this point household name as far as crypto names run. What does that regulatory environment mean for a mining business and for your staking goals?
Yeah, with respect to Coinbase and other crypto companies, my heart goes out to them in a way because the regulations are just not clear. And sometimes certain companies just don't know which way is up. And they speak with the regulators, and sometimes just engaging with the regulators can make a situation even worse. Of course, there's no choice. One needs to engage with the regulators, but it's just very difficult to operate in an environment where the rules are not clear. So my heart goes out to Brian Armstrong of Coinbase, certainly. But what Bitcoin mining is our core business. As mentioned, I'm not a Bitcoin maximalist. I think Ethereum can coexist. The really interesting thing about Bitcoin is that it's a store of value. It's digital gold. And my hope in the future, and I think it's already happening, that people will replace Bitcoin with gold when they were trying to deal with inflation. Bitcoin is a much more environmentally friendly way to hedge for inflation versus gold. Also, with Bitcoin, if you have self-custody, no one could ever take that away from you. It's the ultimate insurance. Gold, you can't really do that. Gold is a very heavy piece of metal. You can't just carry that around. Bitcoin is digital gold. It's a much better proxy. But with respect to Ethereum is like oil. It has multifaceted uses. It has smart contracts. It could actually disintermediate the entire financial system. And that's why, in many ways, crypto is a huge threat to the legacy financial system, because it could truly replace a lot of the banking intermediaries and so on.
Yes, certainly need to take a long view on things in order to have some good conversations in this industry. But certainly in the short term, the banks still are very necessary while we still have so many businesses focused in centralized companies, and we need ways to onboard into crypto assets. So how does the current situation with the turmoil in banks, and particularly those that were serving the crypto industry like Silvergate and like Signature, how does this whole banking crisis affect your industry with the miners, if at all?
Our industry is certainly affected, including the technology community at large. Signature Bank was the last on-ramp fiat bank, basically crypto's last bank. And it doesn't make sense to me why Signature Bank went down. It's not clear to a lot of people. Crypto wasn't even a large part of their business. They were very well diversified. It's somewhat of a mystery. But it does make things operationally uncharted, even if the Fed guarantees current deposits. I think everybody agrees at this point the Fed went too fast in raising rates, which is one of the causes of this. Bank runs don't make sense in this day and age, but social media can make things very weird and really fast. And I don't think banks are prepared for the type of bank runs that social media can amplify. But one positive thing out of this banking crisis is that people have reemerged with the belief that Bitcoin is a store of value, and that's why Bitcoin has outperformed. I think there's no asset that's outperformed better than Bitcoin since the crisis, and that's been very interesting.
Well, turning to the markets, I know that people in crypto love to look beyond price, but it is a lot about liquidity, and I think that recent weeks have showed us exactly that. So what is it like being a crypto business right now? We're coming off of a terrible year, and I'd actually love to hear how you guys fared, because I know that a number of miners were really underwater last year when the prices dipped to their lowest at those two different points during the year. And how do you see conditions improving in the near term, and how is that going to affect your business?
Yeah, look, the growth at any cost mentality was the downfall of a lot of people. Many of our peers, unfortunately, got a little bit greedy and took a lot of leverage, especially when Bitcoin is over 50,000. And that leverage is one of the reasons why a lot of our peers are now bankrupt. We're one of the very few with a pristine balance sheet. We have over $65 million of cash and digital assets, no leverage, no debt. And we operate our business to withstand all business cycles. And we're very careful to not put ourselves in a position where we need to change our strategy based on which way Bitcoin is going. That is not a good and sustainable strategy. So we've avoided that. But we are using the distorted markets at the moment as an opportunity to buy miners. We intend to double our fleet this year, double the size of our fleet this year. And we're also in the business, we're thinking about going into the business of even lending to companies who are needing the capital. We're in a position to do that. And we'd welcome conversations with people in our industry who need to borrow money.
Okay, that's all for Crypto World today, but we are back again tomorrow and we'll see you then.